What if I told you that the next economic superpower might be right on America's doorstep? Can you guess which country recently overtook China as the USA's top source of imports? Surprise! It's Mexico. Mexico is no longer just America's backyard, it's becoming the new workshop of the world. In a stunning economic turnaround, this nation of 130 million is shedding its old reputation and emerging as a global manufacturing powerhouse. Let's look into the remarkable story of how Mexico is finally on the fast track to becoming a rich country and the fascinating tale of Mexico's unexpected rise and exploring why it's finally on the path to joining the world's wealthy nations. The question of Mexico's economic future has been a topic of debate for generations. While the country boasts rich natural resources and a vibrant culture, historical challenges have often held back its full potential. However, recent developments suggest a turning point may be at hand. Today, we will analyze the historical context that shaped Mexico's economic trajectory and delve into the emerging trends that could propel the nation towards a more prosperous future. One of Mexico's most significant assets in its economic rise is its geographical location. Sharing a 1,954-mile border with the United States, complete with 54 border crossings spanning 4 time zones, Mexico enjoys a unique strategic advantage. This proximity has fostered a robust trade relationship that's becoming increasingly beneficial for both nations, but particularly for Mexico. We can see the impact of this proximity clearly when we look at Mexico's economic activity map. The northern regions of Mexico, those sharing a border with the US, show significantly higher GDP per capita. These states have established strong export bases and are far less reliant on commodities compared to the southern regions. But what's truly exciting is that this economic prosperity is no longer confined to the border regions. Recent data from 2023 shows significant growth spreading to southern states like Oaxaca and Tabasco. This expansion is largely thanks to a phenomenon called nearshoring, the practice of transferring business operations to nearby countries. Nearshoring has become a game changer for Mexico. As global tensions rise between the United States and China and trade wars escalate, manufacturing in China has become less attractive for American and European firms. Instead, these companies are turning their attention just across the southern border to Mexico. The impact of this shift has been substantial. In 2023, Mexico saw its largest year on record for foreign investment, with an 18% year-on-year growth. Even more impressively, in February 2024, Mexico overtook China as the leading source of imports for the US. While Mexico isn't likely to completely eclipse China as the world's leading exporter, this trend offers massive growth opportunities for the country. It's fueling Mexico's economy to such an extent that it now ranks as one of the G20's fastest-growing economies. This growth is translating into tangible benefits for Mexican workers, with wage growth increasing at a record pace. The nearshoring trend isn't limited to US companies either. European and even Chinese firms are investing billions in Mexico. They're driven by rising shipping costs and the desire to maintain access to the US market amidst increasing trade tensions. What's particularly encouraging is that much of this investment in 2023 came from companies already present in Mexico, suggesting that the nearshoring phenomenon is just beginning. As it continues to unfold, we can expect Mexico's role as a manufacturing powerhouse to grow even further. To understand Mexico's current economic trajectory, we need to look at its historical economic foundations. Since the colonial era, Mexico's economy has been characterized by resource extraction. The country's vast reserves of silver and other minerals have long attracted significant mining investment. However, the real game changer came in the early 20th century with the discovery of large oil fields. The nationalization of the oil industry in 1938 and the creation of Pemex, the state-owned oil company, marked a significant shift. Since then, the exploration, extraction, and sales of natural gas and oil have been under state control. This move has had both advantages and challenges. On one hand, Pemex's revenues have been a significant source of government income, historically accounting for 30 to 40% of total fiscal revenues. On the other hand, it has also led to periods of economic volatility tied to global oil prices. The period known as the Mexican Economic Miracle from 1950 to 1981 saw impressive growth, with real GDP growing by 6.5% annually. During this time, Mexico experienced rapid urbanization, increased manufacturing, and improvements in education and literacy rates. The discovery of new oil fields in 1977 further boosted the economy, allowing for expanded public expenditure on education and infrastructure. However, the 1980s brought significant challenges. The country's heavy reliance on oil revenues, which had been a blessing for so long, quickly became a curse. As oil prices fell rapidly, Mexico found itself unable to meet its debt payments, leading to the 1982 debt crisis and a decade of economic stagnation. This crisis, while painful, served as a wake-up call. It highlighted the dangers of over-reliance on a single commodity and spurred efforts to diversify the economy. Since the 1990s, we've seen a concerted effort to move away from oil as the primary driver of economic growth. A key part of this diversification strategy was Mexico's entry into the North American Free Trade Agreement, NAFTA, in 1994. This agreement, which reduced tariffs and trade barriers between Mexico, the United States, and Canada, has had a transformative effect on Mexico's economy. Since joining NAFTA, exports as a share of GDP have more than doubled to 41%, and the value of Mexico's exports has risen more than fourfold to $465 billion. More importantly, this period has seen a significant shift in the nature of Mexico's exports. The focus has moved away from agricultural goods and oil towards more labor-intensive manufactured goods like electronics and auto parts. This shift has not only increased and diversified Mexico's export base, but has also led to the creation of higher-skilled, better-paying jobs. The trade surpluses resulting from NAFTA have allowed Mexico to accumulate large foreign exchange reserves and reduce its government debt. The agreement has also led to a surge in foreign direct investment, FDI, estimated to be around 60% higher than it would be without the agreement. This influx of investment has had far-reaching effects. It has allowed the manufacturing industry to expand and modernize its operations. Many American companies have moved parts of their operations to Mexico to lower costs, creating new jobs and providing a viable source of income for many Mexicans. These jobs often require higher skill levels than traditional agricultural or low-skilled jobs, encouraging workers to seek higher education and vocational training. The transition from a resource-based economy to a manufacturing powerhouse has been crucial in Mexico's journey towards becoming a rich country. It has diversified the economy, created better jobs, and positioned Mexico as a key player in global supply chains. While Mexico's economic trajectory is undoubtedly positive, it's crucial to acknowledge the significant hurdles the country must overcome to fully realize its potential as a wealthy nation. These challenges are complex and multifaceted, requiring strategic policy interventions and long-term commitment to address. One of the most pressing issues facing Mexico is its high level of income inequality. Despite overall economic growth, the distribution of wealth remains heavily skewed. According to recent data, the richest 1% of the population owns nearly half of the country's wealth. This disparity isn't just a social issue, it's an economic drag that limits consumer spending, reduces social mobility, and can lead to political instability. Mexico's large informal sector, estimated to account for about 60% of employment, poses a significant challenge to economic development. While the informal economy provides flexibility and employment opportunities, it also results in lower productivity, reduced tax revenues, and limited access to Social Security for workers. Despite improvements in recent years, Mexico's education system still lags behind many OECD countries in terms of quality and outcomes. This skills gap is particularly problematic as the country aims to move up the value chain in manufacturing and services. Enhancing educational outcomes, particularly in STEM fields, and aligning curricula with industry needs will be crucial for Mexico's long-term competitiveness. The ongoing security issues related to drug cartels and organized crime continue to cast a shadow over Mexico's economic prospects. These problems not only deter some foreign investments, but also impose significant economic costs through extortion, theft, and the diversion of public resources to security measures. Addressing this will require a multifaceted approach, including law enforcement efforts, social programs to address root causes, and international cooperation. While Mexico has made strides in improving its infrastructure, significant gaps remain, particularly in rural areas and in digital infrastructure. Inadequate transportation networks, energy supply issues, and limited broadband access in some regions hinder economic development and reduce productivity. Lastly, Mexico's close economic ties with the United States, while generally beneficial, also expose the country to economic volatility. With roughly 80% of exports going to the US, any economic downturn or policy shift north of the border can have outsized effects on Mexico. Diversifying trade relationships and developing a more robust domestic market will be crucial for long-term economic resilience. While these challenges are significant, they are not insurmountable. Mexico's progress in recent years demonstrates its capacity for change and adaptation. By addressing these issues head-on with comprehensive long-term strategies, Mexico can overcome these obstacles and continue its path towards becoming a prosperous, high-income nation. What do you think about Mexico's economic transformation? Will it become one of the world's richest countries? Drop your thoughts in the comments below. We'd love to hear your take. If you enjoyed this deep dive into global economics, don't forget to hit that subscribe button. We've got plenty more eye-opening content coming your way. And hey, while you're at it, give that bell icon a little love tap too. That way, you'll be the first to know when we drop our next video on the world's most fascinating economic trends.